Hey everybody, my name is Nicholas and this is Investing Against the Grain. In today's episode, we're going to talk about 6 catalysts that could potentially send Tesla stock to the moon. So please hit the like button, please hit the subscribe button, and let's get into it. Today, we're going to kick things off with the delivery numbers set to come out by the end of the week. And we're going to go over my estimates, my projections, looking at my spreadsheet. So we'll start off with the Shanghai monthly rumors and actuals. And if we look over here on the right, you'll see this is Q2. We already have Q1 here populated with the actuals now that they've released Q1 earnings and all the data behind that. So we'll focus primarily on May and June numbers. So recently for May, we have rumors that there's about 37,000 deliveries out of Shanghai. And that's a estimate of about 22,000 Model 3s, about 15,000 Model Ys. So this is a little less than what had been rumored before for about, in the 40,000s, but this is still a very solid number. If we look month over month, starting from January, you can see that there is a very clear trajectory of up and to the right. Now, as far as June goes, these are more so my estimates. I think these are fairly conservative. I went with 25,000 for Model 3s, and that's really stemmed from 25,000 being the highest for March. So my thought is I'd rather be more conservative and take that approach and just see what the numbers show me from that perspective. With Model Y, again, this is conservative, and keep in mind, I kind of made these estimates before this May rumored number had come out. So this May, for Model Ys, we have about 15,000, and what I'm projecting for June is about 12,000 with Model Ys. So that brings us to a total of 37. Now, if we go ahead and aggregate all of the months in Q2, we come out to 104,352 vehicles. Now let's look at my Tesla quarterly estimate spreadsheet. So over here, we'll go ahead and start off with Fremont. Again, we can see what Q4 and Q1 numbers look like over here from S, X, Y, and Model 3. Over here, we have my projections in red. So starting with S and X, based on what Elon had said in previous interviews, he only expects a couple hundred vehicles a week, being that we are only 4 weeks into the Model S Plaid being delivered. I had about 250 Model S's and 250 Model X. Obviously, we're not really delivering any Model X's right now, but this might be some leftover inventory, or who knows, maybe Model S will have about 500 deliveries. Now, if we look onto Model Ys, based on what Q4 and Q1 had looked like, I have to believe that there was a little more of a ramp with Model Ys come Q2. So I'm not bumping that up too much. It's only about 2,000 more vehicles, so nothing crazy. Definitely within this same, linear, progressive fashion that we see here. With Model 3, lately it kind of looks like the Model 3 might be, kind of leveling off at the 50,000 number, so I just stuck with that as well. And so if you go ahead and aggregate all of these columns up, we get about 100,500 for Fremont factory. Now, if we take what we just saw from the Shanghai side and we aggregate all those numbers, that's about another 104,000 for a total of Q2 production and delivery of about 204,852 vehicles. Now, this would be a record quarter for Tesla if they deliver these. If you look at Q4 over here, we were at 180, which was an all-time best. Q1, we bested that by about 5,000. And Q2, we're looking to best that by about an extra 20,000 as well. So this is the first main catalyst that we could see really propelling Tesla stock to new heights. What I like to really compare this to is what happened during last quarter when the delivery numbers were released. And that happened back in April 4th. So let's go ahead and take a look at that chart. I pulled up a chart from CNBC of Tesla over the last three months. And if we hover over here to about April 4th, so here's April 1st, and over here we can see April 5th. So between this window is when Tesla had released their last quarterly deliveries, which was on April 4th. And so if we just look at the chart itself, we can see that this release actually had a significant impact in the stock. We went from about, call it 680 to about 750. Let's see the exact, about 762, right? So that was almost $100 swing in the stock price in just that short time. And the catalyst was very clearly the delivery numbers that had come out April 4th. So again, that is, one of the most recent catalysts that is coming up, and we project that to be about Friday, Saturday. Maybe it'll be Thursday for those numbers to be released, but normally it's the second day of the month that they announce the total deliveries for the quarter. I will say one of the other catalysts, and this is why I said 5 or 6 total catalysts, will be Q2 actual earnings. I'm not really sure if I would consider that a catalyst, just for the fact that people tend to sell the news after the earnings come out. So that could lead to a little bit of a dip. But again, that will probably all be dependent on how strong earnings are. And we do estimate that Q2 will be a very strong quarter. Up next, when it comes to catalysts, we're going to talk about full self-driving beta version 9 being released potentially. If we look here on Twitter, we'll see Elon Musk replying to Holmar's catalog with regards to full self-driving subscription and also the beta 9 release. Elon replied, "I'm driving Alpha 9. But we need to fix some obvious issues before releasing beta 9. Hopefully next week. Full self-driving subscription capability should be turning on via Tesla app." So this is the next catalyst that I could see really sending the stock up higher. Having the release happen next week at the same, right after we have deliveries could be a very powerful tailwind for the stock moving forward, and especially into quarterly earnings. Now, keep in mind, this is just the beta release for full self-driving. It is not the actual full self-driving in complete form. I made a whole video about that. You can find it here. That video goes into why I believe full self-driving will be completely feature-rich and done to completion by the end of the year. So in the next 6 months. That, I believe, will be the biggest potential catalyst for Tesla of this next decade. So if you want to know more about that, check out the full self-driving video. Okay, so up to this point, we have discussed the deliveries coming out. We've discussed Q2 earnings. We have gone over the potential for full self-driving subscription and the full self-driving beta version 9 being released next week. Next, let's talk about Tesla AI Day set to happen in July. So potentially in a few weeks from now. Let's see what Elon had to say. So if we come down to Elon's Twitter, this was tweeted June 21st. And Elon says, "Looking at holding Tesla AI Day in about a month or so. We'll go over progress with Tesla AI software and hardware, both training and inference. Purpose is recruiting." So what makes this actually really interesting is that Elon tweeted this shortly after Andrej Karpathy had done his entire presentation with regard to Tesla Vision. So not sure what this really means on the bigger scale, but it does seem, interesting that there would be some connection between these two, right? Andrej gets done with his presentation, and a day later, Elon tweets about AI Day. The other interesting thing about AI Day is that Elon did not call it autopilot, autonomous driving, robotaxi day, or anything of the sort. Elon has been known to say that in the future, Tesla will be known as a AI company, a robotics company. So it'll be interesting to see if there's anything new that it gets announced or any new projects that they tell us that they're working on with all of their neural nets and all the data they collect from the fleet. So keep an eye on that one. That could be a major catalyst and, one of those one more thing type moments. So the next potential catalyst that may be a little further out than, something like the deliveries or FSD subscription or Beta 9 would be the opening of Giga Austin and Giga Berlin. Once these open, this will be dramatic for Tesla and delivery numbers. Each factory is said to be able to produce at least 1 million vehicles and probably more, according to Elon. So with these factories opening, that means Tesla can scale exponentially faster. It means they can get a lot more volume. So not sure which one will open first. At this rate, it kind of looks like it'll be Austin, which before Berlin was projected to open first. But due to some recent headwinds for Berlin, Giga Berlin, and regulatory procedures they have to go through now that they're trying to add the battery side of the house as well, they had to resubmit all of their plans, which means there's a whole nother process they have to go to. So Berlin may be delayed. That'll probably open more so towards December or January. So that is a later opening date. But I would still consider that a catalyst. Whereas Giga Austin, or Giga Texas as some call it, that will probably open around, say, October, November. And we'll probably go ahead and start producing vehicles fairly quickly. We've already seen a lot of the castings from the presses, being created and tested. Not sure if they're being sent to Fremont or not, but we can already see they're testing out all of the equipment and getting things ready to get into actual scale production in Giga Austin. So keep an eye out for that, because those are real catalysts that could come sooner than we think. Up to this point, we've gone over several catalysts that could send Tesla stock to higher levels. Now, this is great for many reasons, but fundamentally, this channel is supposed to be about investing against the grain. And it's about long-term holding. It's about investing, not day trading, not trying to be a swing trader, not trying to make a quick dollar. The point is to have huge returns, outsized returns, beyond what you would normally see or expect. In order to do that, fundamentally, you have to buy and hold. That is the process here. And so the goal of talking about these catalysts is really to get you to start thinking on whether or not this is the time for you to go ahead and buy shares of Tesla. Is this the right time? I would never ever recommend anybody try to time the market. And none of this is investment advice, right? This is just one man's opinion. One man who has done fairly well investing in Tesla, in Amazon, in Apple. So take it for what you will. Now, with all that said, I would caution you to really think about what your entry point is with Tesla. This could be a very good time before all these catalysts start to pile up together and really send the stock to the moon. Right now, you can buy Tesla in the 600s. I do not think you'll have this opportunity again. If some of these catalysts really start to compound together, we may see all-time highs well before the end of the year. Tesla stock could easily break $900 a share. That would almost be a 50% bump from where we are right now. So again, none of this is investment advice, just one man's opinion, but let's take a look at some of the numbers just to really put some data on top of what I am saying about the growth of Tesla. So we'll first start off with a question asked of Tesla during the last Q1 earnings call. And what was asked was from Robert M, and he asked whether or not Tesla will still compound at a 50% annual growth rate, which is what Elon had said he foresees for the future. Now, what this would mean is that by 2025, we'll see 4+ million vehicles. And by 2030, 20+ million vehicles. Robert goes on to ask if 40% is a more realistic number. Now, you can see below here Elon's response saying that he believes 50% is the likely number. However, it is possible, due to uncertainty, headwinds, who knows what happens, that 40% could be the real number. Even if that's the case, 40% year over year compounding is a enormous growth. That's exponential growth. Elon goes on to say, the only way he could even see something happening that will stop them from, at minimum, being 40% would be nothing short of World War III. So, again, these are comments from Elon during the Q1 earnings call last quarter. Moving on, let's take a look at James Stevenson's Twitter thread. Back on June 13th, he made an amazing Twitter bomb with about 69 different charts showing Tesla, from revenue to deliveries to many different metrics from an accounting perspective. But there's really one that I want you to really take note of. I'll blow it up here. This is Tesla quarterly revenue since their inception date. If you can see, it starts in 2009. Just focus on the Q1 earnings on each one of these bar graphs. If we start with 2009, you can't even see it. And keep in mind, this was a $73 million quarter. If you look at the Q1s as we move on out, each Q1 almost eclipses the previous Q1 and even the previous Q2 as well. If we go to the most recent Q1, which was this last quarter from January, February, and March, we see that Q1 almost completely eclipsed Q1 and Q2 of 2020. Now, also keep in mind, Q1 tends to be the slowest quarter, the worst quarter for any automotive company out there. So if Q1 is the smallest, if Q1 is the least profitable, and it just blew it out of the water to where it almost eclipsed half of all of Tesla's revenue from last year, imagine what Q2 is going to look like. This is one of the reasons why I say there's a huge headwind potentially coming. Also, this is why I say this is a long-term investment. Look at this chart. This is growing. This is what exponential growth looks like. This is how you get 10x, 20x returns on your investments, by being very concentrated, by understanding where you're investing in, and by holding. Not by going in and out of trades, not by trying to time the market, by doing your due diligence and staying in there for the long term. All right, everybody, we'll leave it there for today. Please, in the comments below, let me know what your projections are for Q2 total deliveries. I'd be interested to see how far off we were from each other or how similar our numbers are. And then, of course, we can compare that to the actuals. All right, so again, don't forget to subscribe and like, and I'll see you guys next time.